Hello, this is Ahura. I'm here with you with a short review of financial market in the week ahead. However, before going forward and watch the week ahead, let's review first last week and see what we had the last week. It was a kind of light week in the US, but out of the US, we had so many central banks meetings, especially in the UK, Australia, and Mexico, as well as the Brazil. First one in Australia, on Tuesday we had a central bank meeting in Australia. They didn't change the rates how it was expected, but central bank had a kind of hawkish sentence in its statement and press conference after the meeting. On Wednesday we didn't have a meeting, but on Thursday last week we had the central bank meeting on. Where's my? Sorry, there's some. Yep. But on Thursday last week, we had a central bank meeting in UK. The British Central Bank hold the rates on 5.25%, how it was expected, but the surprise was on the number of the votes for the cutting the rates. Two members of MPC members, they voted for rating cut of 25% rate cut, which was a little bit more than estimates and which was a little bit more than estimates and more than previous meeting, which that's kind of read by as a dovish stance from the central bank in the UK and helped the stock market in the UK and pressured a little bit on the Australian and UK currency on the British sterling. On Thursday, we had also central bank meeting in Brazil. In the Brazil, BCB, they cut the rates by 25%, and later in Mexico, central bank, they held the interest rate at 11%, how it was expected. That was the main data that we had the last week, but still, there was some other data that they were very important, such as the British GDP. GDP in the UK in March had a 0.4% increase, which was 3 times more than market estimates, while the February GDP also revised up from 0.1% to 0.2%. That shows that the British economy started recovering much better than previous estimates. At the same time, we had manufacturing and industrial production, and both manufacturing and industrial production in the UK also, they were better than estimates. Later in China also, no, before that actually, on Tuesday, it was a Tuesday on Chinese trade data. We had a Chinese trade data last week, which was very surprising. Chinese trade data showed very let me check. Sorry, it was on Thursday. Chinese trade data on last Thursday showed very impressive numbers, especially on the import. 8.4% increase in the Chinese import in April shows that probably factory orders will increase in next month, because usually the improvement in the import numbers shows much more import of the energy, commodities, and raw materials. That means that the factories in China will have more, they have more orders, and probably export in the next months also will increase. Also earlier today, we had the Chinese inflation numbers that showed the inflation in China increased by 0.3% in April, which was much better than estimates. We know the inflation in China was one of the main problems of the government and the central bank. They have been trying so hard to try to improve, to increase the inflation, as the negative inflation it was affecting the stock markets in China. On top of that, the overall that sentiment from the Chinese stimulus programs that the government and the central bank can have helped the stock markets in China, and the Chinese stock market preferred a little bit better than previous weeks last week. We didn't have that much other data last week, but in the week ahead, still again we will have in the UK, in the United States, again we will have a light week with the focus on inflation data. U.S. inflation on Wednesday will be at the center of the stages. Actually, on Tuesday also we'll have the inflation numbers, but it will be the producer price index, producer inflation, which is also expected to increase 0.2%. But main focus will be on Wednesday, where we will have the consumer price index or core CPI. CPI and core CPI both expected to increase by 0.3% in April, which if we have the same numbers or less than that, it will increase the pressures on US dollar and will help the stock markets to increase. But if the inflation becomes above 0.3%, it doesn't matter for CPI or the core CPI, or even if for both. If the data become more than 0.3%, it means that US dollar can advantage of that, can have advantage of that and increase, but stock markets can get some pressure. Out of that, we have some other data from the United States, such as the retail sales, industrial production, and as housing data. But the main focus will be on inflation numbers. But we shouldn't forget about the housing market as well. Housing starts and house price index. They will be published on Thursday, and we have to follow them as well. Out of the US, let's go one by one. On Monday, out of the US, we have a Turkish retail sales on Monday, which in Europe can get some attention, especially for people who trade on a Turkish lira. But on Tuesday, market will focus on British GDP, on British employment data. Unemployment rate is expected to increase to 4.3%, but average income is expected to fall to 5.3% in March from 5.6% that we had in February. Lower income, which means that central bank and the government in the UK will be able to have a more control on the inflation data or inflation numbers in the next month, which can help the central bank in the UK to start lowering the rates a little bit earlier than previous estimates. Then we will have the German inflation numbers. German data in the last week, especially in the factory orders, they were dismissing the estimates and supporting the idea of weaker German economic growth in the first quarter and as well as the second quarter. German CPI support is expected to remain unchanged at 2.2% with 0.5% growth in monthly base. Later, we will have the Spanish inflation number as well, but market will focus mostly on the German inflation number. ZEW economic data from the Germany and Eurozone also will be watched closely. But main focus will be on the GDP. European GDP being published on Wednesday, which is expected to see 0.3% quarter or kind of 0.4% quarterly increase. Remember that this number was 0% in the last quarter. So if we go from 0% to 0.4%, means very good progress for the Eurozone economic data, which previous weeks as well I talked about that. I told that the Eurozone economies somehow have it get used with the tensions and the problems that they have and started to overcome all these problems and start raising their economy. In Japan, we will have the GDP numbers on Thursday. Don't forget that there are some problems in the Japanese economy. First of all, the lower rate of the Japanese yen can also increase the inflation. So the inflation, which was increasing in the previous months, now they're getting more pressure from the weaker Japanese yen as well. If the GDP for the first quarter also become more than estimates and shows that the Japanese economy is increasing, that means the Japanese central bank, BOJ, will not have any other chance to increase the rates by another 0.1% or 10 basis points. That if that happens, means that the Japanese yen can get some support and increase in the next months. Then in China on Friday, we will have the Chinese industrial production. Don't forget, as I mentioned earlier, Chinese data got some positive news in the last weeks, and that means that Chinese economy can increase a little bit better. Which means which means it can also support the energy price as well. On Friday, we will have the European inflation numbers as well. For April, Eurozone inflation is expected to increase by 0.6% in the monthly base and 2.4% in annual base. Core CPI also in annual base is expected to fall to 2.7% from 2.9% that we had in March. Other data that we should be focused. We don't have that much other data about the inflation in Russia. Inflation in Russia also expected to increase a little bit by 0.1% compared to months ago in both monthly and annual base to 0.5 and 7.8% respectively. Those are the main data that we had. If you go to the chart, let's review the charts, see what we have in the charts. Here in the chart, that's the S&P 500 chart. S&P 500 is expected to see some side movement, a little bit get a little bit pressure before Friday inflation data. But after Friday inflation data, depend on the data. If the inflation become hotter, more than estimates, means that we can go the price can go lower, especially with the higher inflation. It can go under 5,150, and if the price moves under this level, can go further to under 5,000 in next weeks. But weaker inflation means that it can support the stock market can get more supports, and we should wait for new highs. On the other markets, if we go to the US dollar chart, we can see that the US dollar is moved under trend line, but still it has a very strong support at 105 mark. The inflation the inflation will play the main role of the trend of the US dollar trends. For now, before Wednesday inflation numbers, we expect again that the side movement a little bit downside in the US dollar chart. But after that, after Wednesday, is the movement will depend on the result of inflation numbers. On the gold front, in the gold market, gold is still moving in a very clear uptrend. Tensions, weaker expected, weaker stock market, lower bond yields. All of them all together, they help the gold price to increase. For now, we can see it's still moving in a very clear uptrend. On the oil market, we have to say that as the tensions in the Middle East is still high, as well as long as we don't have a peace here, the tensions is high and it can support the oil price. While we had a better than expected inflation number in China, and last week also we had some positive data from the China, which means that all of them together they can support the oil price, and we expect the oil price to move again above a trend line towards $80. This is the overall market, but what we had in the market. If you have any other question, you can write down under this video in Instagram or YouTube. I will try to get back to you as soon as possible. Have a good week. Bye.